Okay, welcome back everybody. It's me from the future, here to take a look at Cardano ADA. So we're on the 1 week chart because we're always trying to look at a midterm to macro view of where our cryptocurrencies are going. In this case, ADA. This is an extremely volatile crypto. We're going to start with the moving averages. A lot of the other cryptos that we're looking at in our top 5 are above the 200 week. So this is looking fairly bearish. We have the 50-week moving average, which is the purple moving average here, suppressing the price at the moment. That doesn't mean we can't break through and move up to the 200 and find resistance there. If there was some type of bullish scenario, we could move all the way up to 95 cents, 96 cents. This 100-week moving average, it is currently arcing down. So as time goes by, the further into the year that we go, the lower this price is probably going to be. So if we find ourselves moving out into midsummer up at this point, the price for the 100-week moving average would probably be around 85 cents. Okay, so there's our probabilities there. We could be suppressed under this 50-week moving forward, and we could just continue moving down like we've done for the majority of this bear market. We have our little relief rallies, and when I say little, 40%, 50% relief rallies, nothing to sneeze at. However, in the scheme of things, being so far below each of these simple moving averages is very bearish, in my opinion. Let's zoom in a little bit more at the current price. Well, at least we have found ourselves above in the upper range of the Bollinger Bands. If we were down in the lower part of the Bollinger Bands, down here in this range, I think it would be a lot more bearish. However, with mini cryptos, we do find ourselves ping-ponging from the low range to the high range, then back to the low range, and so on. And at this moment, it looks fairly bullish that we are in the upper range, and it seems to be making a turn. Okay, so taking a look at some of the trend lines for where the price has gone, where are we buying and where are we selling? That's what trend lines are. They're indicators for that. So let's zoom in. At the moment, we are within 2 different wedges that I can identify here. One is a really ugly falling wedge where we've been stuck in, finally have broken out, but we found support on top of it. So I've kept this here only to show that this is still a steep support, which as time goes by, the price support gets lower and lower at a fast rate. As you see, we did break out of this yellow wedge only to find immediate rejection up at this new purple trend line here. So just finding support on the outside rather than the inside of this falling wedge was interesting because we blasted through but bounced back up and found ourselves with a little bit of support on that trend line. It finally just got so weak and we fell through down to the bottom of it and then blasted back up with a lot of momentum and out. Okay, that does not mean we won't find ourselves getting back in, but typically with something like Cardano, we'll just advance from one wedge to another, all within a downward momentum like we're doing right now. So again, we are outside of this wedge at the moment, and we are squeezed into this this new wedge. So here's 2 different scenarios. We could find ourselves coming back down one more time to test and then blast out, okay? And that could equate to something really nice, like perhaps all the way up to 61 cents, right? Perhaps up to a 41 cent mark. And even higher, we could even make it up to a 90 cent range, but it all depends on when in time that we would reach that. So where are we coming up with these targets? Let's take a look. We'll pull out our Fibonacci tool. We will go from the most recent high down to our most recent low. And where does that take us? Okay, so it brings us up to the 618, which is a very common Fibonacci retracement level. That's why I've got a little target on there. We've also got the 236, which I'm slightly above with our target only because let's turn back on our moving averages. And that's only because our 200-week moving average is right up here. So if we do make it and blast out of beyond the 50-week moving average that we're currently smothered underneath, If we blast out, we could make it up to that 200-week moving average. So, moving out into a few weeks out, another month from now, maybe, if we do make it out that way, that's also similar to the 100-week, which would be arcing down and also intersecting with the 618. So 2 prime targets, in my opinion. So you notice I have quite a few targets down below, the little red targets. Where are they falling? Right on this falling wedge that we're now finding as support. For the bearish scenario, we could find ourselves coming down, maybe straight down, or maybe making one more test before we come down to the upper range. Coming back down, perhaps finding support temporarily here, right on this little support, and then coming back down all the way to our ongoing resistance and support. This is really serious resistance and support depending on which side you're playing. Okay, so we could come all the way back down there, test that, come back up, try to break out again, fail, come back down in a typical Cardano way, as we've done in the past. You see this. Very large, volatile moves. This would be not so different. Coming down, support, resistance, support, and maybe we just baby step our way down to our final target. Now, mind you, we could find ourselves at any one of these, stopping and turning the boat. There are 3 different support areas that are long-term supports. The price could stop during this bear market at any one of these. And not to mention, it doesn't have to be in this area. It could fall, the price could fall down way further into the year, right? This right in this area is May 2024, about a year later from where we are today. So anywhere in here could be a point where we ping pong around and we finally, with one last gasp, find our way down to the bottom. And we have something like a 12-cent range for that lowest of these 3 lows. We also have a 16, 17 cents. And then we also have the 19, 20 cents. These are all super probable, in my opinion. Now, these all can be backed up with Fibonacci retracements, with ongoing long-term supports and trend lines. The downward momentum for Cardano ADA, I mean, there's no surprise here, right? Perhaps we are breaking up and out. That's why we have the upward scenarios. But to me, the probabilities are much more favorable for some type of a low reaching event like this. Now, Q4 of 2025 is our target for the next bull market top. Plenty of room to move down and find our bottom wherever it might be. Is it going to be any of those 3 lower targets that we discussed? Perhaps all 3. Perhaps we'll make it through all 3. Or we stop at the first one at around 20 cents. Either way, right now we're at 39 cents. So what is that? It's about a 50% move down. Okay, so let's quickly do a comparison in fractal terms, where we have our 2017 fractal right here. And now we have our current fractal. Okay, fractals simply repeat themselves, whether it's a small version of this fractal, a medium-sized, a teeny tiny version of it. That's what stocks do. That's what cryptocurrencies do. Bitcoin, they all have these repeating fractals. You see the momentum and the shape of this fractal, this reoccurring fractal. And you see this duplicate clone of this fractal. Yes, there's some slight differences, but at the end of the day, it's the same fractal. But you see what happened here. We made our way down. We found ourselves with this midterm baby bull run. We came back down and we just bled out, flat line. Now this price is following the same exact path. The question though is, where was this midterm baby bull run? Are we in the process of still putting that in? And that's what maybe those targets that we talked about were. And those targets could be the replication of this baby bull run in this current fractal. Like we said, 61 cents, 90 cents, maybe that's the top of that baby bull run. But guess what? To me, all that means is we're just going to come right back down, finish up our bear run, and continue on into 2025's bull run and bull run top. Q4 2025 estimation. So again, my money is on the low numbers, and that's about 20 cents, 17 cents, and 12 cents. That's the zone. Now, what else though? One last thing I wanted to point out. What's this purple base trend line down here? Well, if Cardano ADA is simply an oscillating cryptocurrency, that purple line could be another probability. Well, if you remember the 2017 run, we simply started at around 2 cents, went all the way up to $3 and something, came all the way back down to 2 cents. That, my friends, is an oscillator. So if we do, this lower trend line is slightly moving upwards. If we find ourselves at that mark, I would say it's somewhere between 3.5 cents to 5 cents for Cardano. I don't want to burst anybody's bubble, but it's a probability, okay? Not saying it's going to happen, but looking at these fractals, this to me would also confirm if we do get down to that 5 cent range, that would confirm to me that this is an oscillator, okay? So something similar to what Litecoin has done for the last 2 cycles. So hopefully Cardano is not an oscillator, because coming back to 5 cents would crush a lot of people's dreams. but again, looking at this lowest trend line, I think that's enough on Cardano ADA. We've got our upper targets and our lower targets. Let's see what unfolds over the next couple of months, including even the next few days. But until then, buy low, sell high, and never sell at a loss. Thanks everyone, and have a good day.